Hey everyone, and welcome back. What a crazy week it was for markets around the world. It was like a big global tug of war, with prices soaring one minute and dropping the next. The big question on everyone's mind was, what's the main bank in the US going to do with its interest rates? And when we got the answer, it changed everything, all the way from the US to India and the Middle East. Let's break it down in a way that makes sense. In the United States, the week started with a lot of nervousness. The big US stock market, and especially the tech stocks, took a hit. Think of big names like Nvidia, AMD, and Broadcom. They all slipped, with some losing over 5% of their value. People were starting to wonder if the recent hype around AI was finally running out of steam. But then, the most important person in the US economy, the head of the Federal Reserve, gave a speech. His words were the big plot twist of the week. He hinted that the Fed might start cutting interest rates soon. This was like telling everyone that borrowing money might get cheaper. The market loved this news. On Friday alone, the US stock market surged, making up for all its losses and then some. It showed that everyone is really hoping for cheaper money to keep the good times rolling. Meanwhile, over in the Middle East, the markets had a much calmer week. They didn't get caught up in the global drama. The stock markets in places like the UAE and Saudi Arabia held steady. This is because these countries are no longer just focused on oil. They're busy building new businesses and attracting new projects. Their stability shows that their plan to grow is working, and they're becoming a big player on the world stage. And what about India? Their story was a bit more up and down. The main stock markets, the Sensex and the Nifty, spent the week in a constant battle. They ended the week slightly down. A big reason for this was a major drop in the Indian tech sector. Companies in this industry have been struggling because foreign investors, who usually love them, have been selling off their shares. These investors are worried about the global economy, and new trade rules have also made it harder for these companies to make money. But just like in the US, Friday's news gave the market a jolt of hope, and things ended on a high note. Finally, in the world of cryptocurrency, it was a real roller coaster. Bitcoin took a big fall early in the week, but after the good news from the Fed speech, the digital currency world came roaring back. Ethereum was the superstar, hitting a new record high. This proved that people are still very excited about new digital money and the future of crypto. Check out my full video on Ethereum for deeper insights. So what's next? Can the positive energy from Friday last? In the US, everyone will be watching for more economic reports and company announcements. The biggest thing to watch for is a report on Friday about consumer spending and prices. This is the main report the Federal Reserve looks at to decide on interest rates. If the numbers look good, it could seal the deal for a rate cut and push the market even higher. In the Middle East, markets will likely continue their steady climb if oil prices stay calm and the US Fed's hints turn into real rate cuts. This could make dividend-paying stocks in the region even more attractive to investors. And in India, there's a lot of hope that the Nifty market index could go even higher, possibly reaching a major milestone of 25,000. Stocks in areas like banking and electric vehicles look especially strong. The key will be to see if foreign investors start buying again, which would be a huge vote of confidence. As for crypto, the positive mood is back. Analysts are now hoping that Bitcoin could go up to between $130,000 and $200,000. Ethereum is also expected to keep rising, possibly reaching $10,000. The whole digital money market seems set for more growth. That's our weekly recap. It was a week of big news and a dramatic comeback. Now let's see what the next chapter has in store. This video is for educational purposes only and does not constitute financial advice. If you found it useful, please like, subscribe, and turn on notifications for the Zalvora channel to stay updated on time.